Hello, I am Wael Yahya, Certified Financial Technician Expert from the International Federation of Technical Analysts. In this video, I will apply the classical technical analysis methods to HPQ stock over all the time frames, and as usual, let us start with the monthly chart. Over the monthly chart, we can see that the general structure of the stock is positive over the very long term, and it's clear that we do have some kind of an uptrend, but of course this is not a traditional uptrend, it's a mega uptrend, and it is considered a positive structure at least as long as the stock manages to keep above the trend channel line. That's it for the market structure. Any break below the mega channel line will be considered bearish over the monthly chart. Another sign of weakness over the monthly chart is the size of this candle. It's of June market action, and I can notice that it is an engulfing pattern. Bearish, of course, bearish engulfing, and it engulfed really around 6 candles of price action, and this is very bearish over the short term. When we talk about the effect of candlesticks in general, their effect is not trend changing, instead it is concerned of more of waves and moves reversals, not trend changers. As we know, chart patterns, classic chart patterns, are the ones concerned with the reversal of the trends or continuations and such. But candles, their genetics are more programmed towards just moves and waves. So this bearish engulfing pattern gives a sign of negativity over the monthly chart, and it may be a clue that the mega channel line may be broken downwards sooner than later. Keep this in mind. Now let's check the long and medium term over the weekly chart. Things start to look worse, not just bad. Things here are starting to look worse. You can see here is the long-term trend line connecting higher lows as well as higher highs, but things are not good as you may think. Why? Because the trend is broken to the downside, and the break was through a full seller's control long Japanese candle plus a 3 weeks close below the trend line. Let us say just it's 2 weeks close below the trend line. This 2-week close confirmation came after the candle of the break, and we can notice that the candle of the break also broke a short-term sideways over the daily chart, which we will talk about soon. So another sign of weakness is the size of the long bearish sellers candles over the weekly chart, and this is confirming the size and length of the bearish candle of the monthly chart, which we already highlighted it in the red circle or in the pink circle. So over the monthly chart, things are starting to look weak because the engulfing bearish candle. Over the weekly chart, the trend line is broken and confirmed the break by 2 weeks close below the trend line, and the size of the candlesticks on the falling weeks is very big, very long, and the close is always nearest the lower shadow, which indicates seller's control till the final day of the week. Now let's check the short-term details over the daily chart. And here we go. We can see clearly the trading range over the short term. It was ranging between the support around $34 and the resistance around $40, we may speak, which means that the trading range thickness was around $6. I like to subtract this from the level of the break. So we have 34 minus $6. The target will be around $28. So keep in mind that over the short term, we do have a downward target over the short term around $28. Things over the short term are very negative. Things are bearish, clearly bearish, after the break of the trading range to the downside, and things will stay bearish as long as HPQ is below the $34. So over the monthly chart, things are showing signs of weakness. Over the weekly chart, things are not looking good at all, and over the daily chart, the break of the trading range confirmed the negativity from the upper time frames. So please keep in mind, HPQ will be suffering over the short and medium terms with targets ranging around $28. The only hope, which is of very low probability, that HPQ manages in a way or another to close one whole week above $34 again on high volume, indicating some kind of powerful correction, which I don't think will be the case. Notice that the pullback is taking place on almost below average volume, indicating that the buyers are not as strong as you may think they are. Please consider virtual trading on the short selling side when the stock approaches the area ranging between $33 up to $34. I think a stop loss will maybe above the last peak over the daily chart, maybe above 36, and the target we have already said it will be around $28. Until then, we will keep watching HPQ because it will be a very good signal and a very good virtual trade. Thank you for watching. Please like, share and subscribe, and see you soon.